Good morning. Hope everybody's doing good, staying healthy and safe in these crazy, unprecedented times. I'm just going to give it a couple minutes here and just make sure everybody's popped in, and then we'll get started. But we will do questions and answers at the back end of the presentation. You don't use the chat because I won't look over the chat. But there's a Q&A function. You can post your questions there, or you can email Jennifer Crawford, who's on the first slide here, and she will forward those emails to me as we do the question and answer format. So either way, I will be able to look up the Q&A questions as well as see the emails from Jen. So technology is not my forte. So hopefully this goes well, because I do have some Excel files that we're going to look at and kind of look at some test cases of how this forgiveness works. I would like to say that this is a fluid situation. It changes constantly. I finished this presentation last night around 9 o'clock, and then after that presentation, something else came out from the IRS regarding the deductibility of the expenses, which I'll go over at the back end of this presentation as well. So also today, I believe the SBA is supposed to give us more guidance on the forgiveness, because I still think there's open questions. I have a big open question. Yesterday, I submitted a comment to the SBA on the interpretation of the forgiveness in regards to what is defines full-time equivalents. So I'm hoping that gets instituted in their frequently asked questions that they've been putting out about, I guess, every other week or so. So let's get started. I assume that everybody on this call has received their money, or they've been approved for the PPP money, or you're in the process of getting approved for PPP money. So we're not gonna go back and redo what we did about a week and a half ago about this plan. We're just gonna go through how the forgiveness works to ensure that you're gonna be able to maximize this benefit. So our agenda is, again, to talk about the forgiveness of the PPP loans. I'm gonna talk very briefly about some other resources. I have eliminated employee retention credit and deferral payroll taxes. I went over that a couple of weeks ago. Know that they're still out there. If you have questions, let us know. And then we're going to take some questions at the back end, but we're really just going to focus on the forgiveness today. So as you know, this is a program under SBA created under 7A36 where you can borrow 2.5 times your average payroll. You can see that I put in red, you do not need to establish that you were able to get credit elsewhere. And that's still true today, but they're slowly changing the standard. And I believe that they might not be changing the standard for the folks that are on this call, but they're changing the standard because of certain companies that were eligible within the guidelines of the law, but probably wasn't intended for them to take it. And that's the publicly traded companies. We've seen the Ruth Chris, we've seen the Potbelly, we've seen Harvard. Although Harvard money was not the PPP money, it was some other educational money. So there's some additional standards out there. I still don't think it applies to us, because my view of this is you have a fiduciary responsibility to your company and your employees to ensure that you're setting your company up properly. And we don't know how long this is going to last, and we need resources. And I made it a point for every single client to apply for this loan. There was no personal guarantees or no collateral. Again, I see I have another highlighted mark here, and when you apply for this loan, at least in the first wave, that uncertainty of current economic conditions made the loan necessary to support the ongoing operations. Again, they're changing the standard a little bit about whether you needed this. So I think if in an extreme situation where you're an essential business and you're doing well because you're making medical equipment that they're using right now, and you went out and got this PPP loan, they could say possibly that you don't qualify for that. I think it's hard to change the rules midstream, but this is our government as we see it. And this plan was put together so fast and implemented so fast that there was bound to be some mistakes that were made. Let's talk about the forgiveness, because that's what we're here today. It's in Section 1106 of the CARES Act. So if money is used for the intended purpose for the first 8 weeks after you received that money, then that money will be forgiven on a tax-free basis. So what payments are covered during the first 8 weeks? And that is a change. That was a positive change. First 8 weeks was supposed to start when you applied for the loan. Now the 8 weeks starts when you actually receive the funds, because that could be a week and a half to 2 week period. The payments that are covered during the first 8 weeks are payroll costs, covered mortgage obligations, covered rent obligations, covered utilities. And I'm going to go through definitions of each of those. Of course, the forgiveness cannot exceed the principal of the note. The forgiveness amount will be reduced if you cut employees during this 8 week period, cut salaries of some employees during this period, and received the $10,000 advance under the disaster loan program. I am seeing people starting to get those $10,000. It hasn't not been widespread. It was definitely slow in the making. Payroll costs. It's payment of compensation, and compensation was capped at $100,000. So that includes wages, commissions, tips, anything that would be included in your W-2 as cash compensation. For self-employed taxpayers, it's the net earnings from self-employment income up to $100,000. Cash tips, as I said, vacation, parental, family, medical leave, all that pay, which is included in your W-2, is all included. Group health care benefits pay, including insurance premiums. So when this thing first passed, I was on the understanding that it was all group plans. But in doing my research for the last few days and digging into this, it doesn't appear that group disability or group life premiums are going to count as a payroll cost. It's going to be strictly, unless they come out with some more guidance, which they will, it's going to be strictly the group health care benefits, which I believe would include your health insurance, your vision insurance, and your dental insurance. And state and local taxes on compensation of employees, so which is your SUTA, but not your federal unemployment. It's only going to be your state unemployment. Not counted again is wages of above $100,000 for any one employee on an annualized basis. Your payroll tax that you match, compensation for any individual who residence is outside the United States. And the last point there is the qualified sick leave. So as of April 1st, if you had an employee who had to take sick leave because of COVID, or they had to take family medical leave because of COVID, and you were paying them, and I forget, that was the first round of, that was the first bill that was passed, where you get tax credits associated against that salary. You can't double dip, use that payroll cost where you're getting tax credits to also get the forgiveness. Coverage mortgage obligations. There's a lot of questions on this from my clients. The text reads, it's the liability of the owner, of the borrower, is a mortgage on real or personal property. So, when we hear mortgage, we hear mortgage on real estate. We don't necessarily think of a mortgage on personal property. So I just think it's the language that they use. They could have substituted mortgage for loan. So if you had a loan on personal property that was incurred prior to February 15th, that is a covered mortgage obligation. Now, what was amended on the rules and regulations on April 15th was it does not include the principal payments that you're paying. It's only going to include the interest expense on real property and personal property. So on real property, most of your payment probably is interest expense, so that's a positive. On personal property, where the loan is a much shorter period, usually 3 to 7 years, the interest piece is probably not going to be that great unless you're a highly capital-intensive company. But personal property, interest on personal property does qualify as a covered mortgage obligation. Current rent obligations. Again, a lot of questions on this is that I think everybody assumed that rent was just on your facilities. It's not. It's also on personal property. So if you lease equipment, you lease a copier, you lease your furniture, any property that is being leased is an allowable expenditure for the PPP money. I put a note there. It does not specifically state personal or real property, so my interpretation is I include all property. Now, there could be, when the SBA continues to put out guidance on it, that could change, and we'll continue to update you. Covered utilities. The only one that's kind of missing is trash. To me, I consider trash a utility when I look at a financial statement. All these services had to begin prior to February 15th. So your gas, your electric, transportation tax, utilities, which we don't have generally here in Delaware and Pennsylvania. I think you see that more up in New York and some of the bigger cities. You might have this somewhere in Philadelphia. Telephone and internet expenses. So I'm going to go through a lot of examples. And so the example that you see here, we're eventually going to flip over to look at an Excel spreadsheet that I'd be happy to send to you all. And it's going to walk through this example. And I probably will play with the examples just so you can see how the forgiveness changes. And I was on a call yesterday with a client. They got $500,000 in PPP money, but their business was severely hurt in this, as a lot of businesses have been, and he had to cut staff. And he cut staff prior to this act being passed, and so he's down to 25 employees. And when you work through these calculations, which you'll see, is that his forgiveness was only going to be about $180,000 on qualified expenses in the neighborhood of around $400,000. So this presentation is to make sure that you're prepared and not surprised, so that you can plan properly. So here's our first example, and this example is going to build along the way here. I'm going to keep adding slightly different things that affect the forgiveness. So Exco had $2.4 million of total payroll costs for a period of April 1st, 2019 to March 31st, 2020. The average payroll costs were $200,000, so they were eligible to borrow $500,000 in PPP money. It just so happens that my client yesterday happened to be exactly the same case, but this is not my client. This is a generic example. During the first 8 weeks after Exco borrows money, it incurs payroll costs, mortgage interest, utilities of $440,000. So in this first part of this example, their employment size remained the same. So they are eligible for $440,000 of loan forgiveness. And the remaining $60,000, that's going to turn into a loan or remain a loan. And it's going to be deferred for 6 months and up to a year. And then you're going to pay that back over 2 years. So the amount of eligible forgiveness is reduced by when you lower your employment, in that example of 50 employees down to 25, I have to lower my eligible forgiveness by that percentage. So my denominator is my employment in one of the two base periods, which was February 15th to June 30th last year, or January 1st this year to February 29th. So that's our denominator, and we can use the lower of those two numbers. Then we have to figure out what our full-time equivalents are during this 8-week period that we have that we're spending this money. If we have less than that denominator, then there's going to be a reduction of what expenses that we can take. So here's my comment to the SBA yesterday on something that I think is entirely unclear, which is what's the definition of a full-time equivalent? So for health insurance, a full-time equivalent is anybody who works 30 hours. And somebody who works 20 hours is not considered a full-time equivalent. For calculation of whether you were eligible for this loan, they counted heads. So whether you had 100 full-time people and 200 part-time people, they counted that as 300 people. And as long as you were below 500 people, you were eligible. But in the language for the forgiveness, they're talking about full-time equivalents. And I actually reached out to a friend that used to head up the SBA in Delaware, is now heading up the SBA out in Iowa. She tried to point out to me question 36 in the latest frequently asked questions, and it doesn't answer the question. And I got back to her, and she's supposed to be researching it, but the banks can't answer this question. I'm not sure the SBA can answer this question. They're gonna have to give us more guidance on it. And there's two ways to look at it. Are only full-time people are gonna qualify? Or will somebody who's working 20 hours, will that count as a half of a full-time equivalent? And so if you have 20 people working 20 hours, does that qualify for 10 full-time equivalents? I think when you're going through this, you have to look at it both ways until we have these answers. So here in this example, we have 30 full-time employees during an 8-week period after it received the $500,000. It had 50 during its base period. So the loan forgiveness of $440, right? That was the qualified expenses that they expended during that 8-week period on those on payroll, rent, and utilities. I now have to reduce that $440 by 40% because my employment is lower by 40%, which is 20 divided by 50. So I'm going to lower my forgiveness by $176,000. That's going to be eye-opening, I think, for a lot of you when you start running these numbers. It was eye-opening on my conversation with my client yesterday that, all right, I have qualified expenses of $400,000, but I'm only going to be able to get forgiveness of $180. Do I give this money back? Do I bring employees back and pay them to get my equivalents up? So these are things that we'll talk about a little bit more towards the back end. This is a really important section here on full-time, because this is going to have the greatest impact, besides the dollars being spent, on how much you're going to be able to get forgiven. So the amount of that's eligible forgiveness is also reduced by any one person who earns less than $100,000, where you lowered their salary by more than 25%. So in this example here, the employee earns $70,000. After they took out the Paycheck Protection Loan, A salary was reduced to $40,000. So that is a greater than 25% decrease in A's wages. Thus, the forgiveness amount of $440 would be reduced by another $30,000. So the important point here is a lot of us businesses, we did lower our employee salaries to save cash, but you want to be careful to limit it before more than 75,000, because you're not going to be able to use those funds and get forgiveness on it. So if you have lowered your employees by more than 25%, you may want to consider restoring that. And we're going to talk about that a little bit further along as we go. If an employee replaces any full-time employees or restores that reduction of wages, that reduction that was below, that was more than 25% that we just talked about, prior to June 30th, then we get that forgiveness restored. So they had 50 employees before they were eventually cut down to 30 in April. A paid salary of $60,000 was reduced to 30 on April 1st. Before June 30th, 2020, X rehired the 20 employees and raised A's salary back to $60,000. So that loss of forgiveness that we saw a couple slides back here, where our employment dropped, that $176,000 goes away. And then this, although it's a slightly different example, this $30,000 loss of forgiveness goes away because we restored that employee's salary, as well as we went back to, let's call it, full employment. So we're back and we're entitled to our full $440,000 of forgiveness. So the goal here is, we don't know what tomorrow is going to bring us. So we definitely don't know what the back end of June is going to look like and what the economy is going to look like at that point in time. But if you did have to substantially cut employment or substantially have to cut salaries, we will still have an ability to restore that forgiveness in the last week or two of June, even if that last week or two is beyond your 8-week period. So how do we get this forgiveness? You have to apply to your lender within 60 days of your 8-week period ending. We're going to have to document the number of full-time equivalents that we had both in our base period as well as our period during this 8-week period of time. So as I've said a couple of times, we still have to get the true definition of full-time equivalent, and I'm hoping that comes out today. I've been postponing this webinar because I was hoping to get guidance on that, and we just haven't got guidance on it. So some of the documentation will be your payroll tax files, your unemployment files, canceled checks, invoices for your mortgage, your rent, and utilities. And a certification that information is true and correct and the amount of forgiveness was requested was used to retain employees. Pretty vague statement, but I think if we didn't get this money, we probably would be much more aggressive on reducing our staff levels. But it's a very broad statement, and I don't like broad statements when it comes to certifications or any type of legal documents. I like that to be tighter. So these are a lot of questions that we've encountered, and there's probably a heck of a lot more questions out there. Do we pay hazard pay? I got some clients that are paying all of their employees, but only half of them are coming into the office. And the half that are coming into the office say that, that's not really fair. I'm working, I'm getting paid the same amount. So I have one client who I think is on the webinar. where everybody's on call. If they get called, they have to come in. For the folks who don't come in, they're paying them 6 hours of pay. And for the people who do come in, they're paying them 10 hours of pay. So they're getting hazard pay. And the people who aren't coming in are getting their salary reduced, but not below that 75% level. So it kind of helps a little bit with, I guess, fairness. And I've had this question. Should we pay people not to come to work? You know, and that's a question I can't answer. And the way I have answered it or tried to help people answer that question is, do I really want that person back? And it doesn't make sense for them to come in the office right now because we don't have any work. Well, in that case, I guess it makes sense because you really want them to come back and you don't want them looking around. But you know, just paying people to sit at home, it's, you know, that's a moral question for you all to make on your individual business. It's a really hard decision. And some people don't want to come back because they're making more on unemployment, the way they structured the unemployment, which, you know, I think is going to create unintended consequences as the economy does start to open up. Right now it's 4 months, but we've seen in the past how the Fed extends unemployment. So if somebody was making $30,000 a year as a medical assistant, and now they're making more than that sitting home, and they don't have any motivation to work because they like being home with their kids or doing whatever they're doing, it's going to be hard to motivate these people to come back. That's not true for everybody, but it's going to be true for some people. And I know, talking to a lot of my clients, they're afraid of trying to get their people back because they're making more on unemployment. Do we prepay our 401k match and profit sharing? So it's a hard question because we don't know how this year is going to end up. Are we going to have a V in terms of the economy bouncing back, or is it going to be a U and take a long time to bounce back? But the 401k match and profit sharing, they're qualified expenses. And if we do this right, you'll get 100% forgiveness, and essentially the government made that 401k match and profit sharing contribution for you. Again, I don't think you need to make that decision today, but you should model it and then make that decision in that 7th week of your 8-week period on whether you should make that contribution. So how much can that be? Can you do 100% of the year's contribution in this 8-week period? Well, it's pretty silent on that, but I'd reckon to say no. I would think that it would be fair to say that you can do 2/12 of what your contribution was in the previous year. But there's nothing that says, there's nothing in the rules and regulations by the SBA or nothing in the act that says that. That's just me trying to incorporate, I don't know, common sense, which sometimes is left out of these bills. A lot of you, your banks have come back to you and said, we'll defer payments for 3 months. So do you take that deferment because the interest on those loans was a qualified expense? And I guess you have to look at your individual situation on your cash flow, how that's going to work. What I did on one real estate property that I have is I took principal deferment, but I kept paying the interest. Now I don't have a PPP loan, but that's something to think about. Don't defer the whole payment, maybe pay the interest, use the PPP funds to pay the interest. The one thing that we have to make sure is that 75% of the funds expended have to be used for payroll cost. So when you're modeling, for some companies it's easy, and for some companies it's really hard, because some companies have low rent and they're highly labor intensive. Then you have other companies who may not be as labor intensive but have a big warehouse that's costing a lot of money. So you got to model this out. Don't wait to after 8-week period to look back at this. Do it today. Do I ask for a rent reduction? And landlords, they've been very, should I say this? They've been somewhat nice. A lot of the ones that I've heard from clients, they've given them some rent reductions or rent abatements, and are putting it either at the back end of the lease, or they're amortizing it over the next year after 90 days. But do you really want that rent reduction? Because it's qualified money and it's forgiveness. Again, you got to make sure you hit that 75-25 test of 75% of your expended funds being payroll. So these are the things, that's why I really want you to model this, why it's early in the game. Do you pay bonuses? A lot of you pay bonuses in December. Do you pay those bonuses now? So as long as the annualized salary on that bonus doesn't exceed $100,000, it's probably not a bad idea if those funds are going to go on expended, because it's good. Depending on how your calculation is going to work, it's going to get forgiven. So the government helped you pay some of those bonuses. Again, something you have to model. You can't do all these. You're going to do what makes sense for your business. There's no right answer. And then again, the biggest impact that you can have on your forgiveness, besides spending the money, is being at full employment come the end of June. Because if our employment's at 25%, or excuse me, 50%, it's going to have a significant impact on what's going to get forgiven. I know that you're not going to bring people back if we're still in lockdown, or the economy's not moving where we think it needs to move. But those are some considerations. I had some clients say, well, I'll just bring them back for a week, and worst case scenario, and they'll count as my numbers. And there's nothing that says you can't do that. So we just got to look at that. We got to look at the economy. Got to look at where you stand on this calculation over the coming weeks. So here's where the technology could get interesting. I'm now going to try to pull up an Excel spreadsheet. I'm hoping it works. Fingers crossed, everybody. So Jen, I'm asking Jen to make sure she can see my Excel spreadsheet. Give me a thumbs up. I'm going to start. I haven't got thumbs up yet. Oh, wait. Yep. Okay. So you guys can see my Excel spreadsheet. So I will send this spreadsheet out to all of you, as well as the slides. They'll probably get out. It'll get out today or Monday, and as well as a spreadsheet, because you could use a spreadsheet to do your modeling. I tweaked the spreadsheet. I did not design this spreadsheet. I still test the spreadsheet logically, make sure that it's working. So do not take this spreadsheet as verbatim, because I kept finding little tweaks that were not working. So if you're unsure, get in touch with us and we'll work with you on making sure that that the calculation is working for you. So in this example, and I'm gonna have to scroll down because it's kind of long, and this is kind of difficult in the format. It'd be easier if we were all in the same room together and I can see faces not understanding what I'm saying. But in this case, we're going to stick with that example that was in the PowerPoint. Their loan was $500,000. They spent $360,000 on wages. They spent $40,000 on healthcare benefits. So their payroll costs were $400,000. Their rent and utilities was $35,000 and $5,000 respectively. So they spent $440,000. So you can see their employees during this 8-week period are 50, and during the base period it was 50. So they have zero reduction. So they're going to get a $440,000 forgiveness. So now I made this example slightly different, in that I said my payroll costs were not going to exceed 75% of my total spend, and I want you to see what happens. So again, I borrowed $500,000. I only spent $260,000 on wages and $40,000 on health benefits. But you can see my rent went up to $120,000 in this example, and my utilities went up to 20. So my spend is the same, $440, as the first example. My employees are the same, 50 and 50. But my forgiveness is only $410,000. And that's because my payroll did not hit 75% of my overall costs. So that, in order to, I had to essentially lose some of my rent costs as a qualified expense so that 75-25% ratio worked. So now, this is the example of the really big impact on unemployment levels dropping. So again, I'm back to the same example, $360,000 in payroll, $40,000 in health benefits. My rent is $35,000 and utilities are $5,000. So my spend again is $440,000. So remember that example one, I got $440,000. But in this case, I lowered my employment to 30 people. And I had 50 in my base period. So I dropped my employment 40%. And I have to now lower the amount of potential forgiveness, that $440,000 number, by 40%. So essentially 440 times 40% is $176,000. So now my forgiveness here is now only $264,000. Exact same example as the first one, except my employment dropped. This is an example where I made one employee make have one employee that their pay cut was more than 25%. So again, everything's exactly the same: $500,000 loan, $360,000 in wages, $40,000 for healthcare. My rent and utilities are the same. My spend is still exactly the same, $440,000. My employment is the same as the previous example, 30 people now versus 50. So I have a $176,000 reduction of my debt forgiveness because of reduction of people. And then I had one employee that I lowered their salary. It goes back to the example that was in the PowerPoint, that I lowered their salary $30,000, which was more than 25% cut. I now have to add that 100% of that $30,000 back to my debt, to the reduction of my forgiveness. So my forgiveness will be reduced by that 176 and that 30. So now I lose $206,000 of forgiveness. And now my forgiveness is now only $234,000. I don't think that one's going to have a big impact. I think the two big impacts are going to be, do I meet that 75% test? And do I, what's my employment look like? I think those are the two bigger factors. Because I think a lot of employees, if they had a bigger cut than 25%, they may be collecting unemployment right now. So that was kind of the negative. But here's the positive, right? Same example. My payroll is the same. My health benefits are the same. And my rent's the same. $440 spend. I had 30 employees. I had potential loss of forgiveness of $176,000. I had that employee $30,000, but I restored it all. So you can see here on row 63, number of employees whose wages were reduced by 25% or more, but restored by June 30th. So I get that $30,000 back. And you can see up here on row 57, number of full-time equivalent employees added by June 30th. So I just put 20 to get me back to 50. And you can see I'm back to that restoration. But let's just say that we only were able to bring back 10 people. I should never do that because I should, yeah, see, it didn't work. See, that's why I don't trust the calculation. I have to make sure that it all flows. In that case, it did not work. So I have to figure that out why and correct that. So now I'm going to go back to the PowerPoint, hopefully. Jen, give me the okay that it's working. I don't trust it. So miscellaneous issues. So it came out. I don't know if it came out in the new bill or whether it was just the Treasury instituted it. So if you got more than $2 million in this program, and I have a number of clients that did, they're all going to be audited. I think audit is a different word. They're definitely going to be looked at. They're going to be looked at to make sure that you should have asked for the loan and that it was expended in proper manner. I don't think you should be worried if you did get a loan of more than $2 million. I just think we have to make sure that we have our ducks in a row to make sure we're expending the money on the proper expenses. So this is the change that came out last night by the IRS. So when this plan came out, it almost seemed too good to be true. Government's going to give us money. We're going to get to use it to retain our payroll, pay our rent, and it's going to get forgiven. And then on top of that, that forgiveness was going to be tax-free, which it is. But on top of that, the expenses that you use for the money that was forgiven was going to be a deduction. So it was an extreme benefit of getting this money and paying your deductible expenses with tax-free money. The way to look at it, and I kind of joked with some of my clients, was it's essentially a capital infusion into your business. But the IRS released Notice 2020-32 last night, and they're saying now that the expenses that are being used in this plan and then the loans being forgiven, that those expenses are not deductible. Senator Grassley came out and says that's not the intent of the bill. So it remains to be seen whether Congress is going to fix that. So Congress has the ability. IRS doesn't have, they don't get the right to the laws, they get to interpret it. And so it was silent in the bill about whether the expenses were deductible. So the IRS is interpreting that, well, if you're using tax-free money, you don't get to deduct the expenses. I mean, it is logical to me. However, it wasn't the intent of the bill. So I'm hopeful that Congress will adjust this. But as of right now, it's different than what I thought yesterday morning when I woke up. If you're a nonprofit on this call, it doesn't affect you because you still the forgiveness is still tax-free, and the deductibility of the expenses don't really matter. The expenses need to be incurred and paid during that 8-week period. So, paid makes sense, right? They're doing it on a cash basis that you have to pay this money out during 8 weeks. Incurred, well, I think why they instituted that word was they don't want you prepaying a whole bunch of stuff or paying an employee's salary for the next 3 months or 2 months or 1 month, whatever it is, and put it in this 8-week period. So again, if I have a loan of over $2 million, I want to make sure you're doing it by the book. So incurred and paid is something we have to keep our eye on. Now I throw this out to you, and I wish we were able to have more dialogue on this. And I just throw this out, and I'm sure I'll be having this call with a bunch of clients over the coming weeks, or really not over the coming weeks. I really have to next Friday, I think. If you cut a lot of your employees and you're not going to get a lot of forgiveness, does it make sense to give this money back and then take the payroll tax credits? Every single one of you has to look at that situation to see is it better to take payroll tax credits? Am I eligible to take payroll tax credits? And I originally had those slides in here, but I didn't want to go too long. And I'm going longer than I thought, and I wanted to leave more time for questions. But we got to have those conversations. In some, I don't think it's going to be widespread, but there's going to be some cases that it's going to make sense to give the money back to them, and let's take the payroll tax credits. So I'm not an auditor. I run the tax practice here. So my audit partner just gave me a couple of bullet points. So for those of you who do financial statements, external financial statements, and even internal financial statements, the proceeds that you receive, it's a loan payable. Don't put it as other income right now. It's a loan payable as of today. If you have deferred financing costs associated with this loan, that should be capitalized and expensed over the life of the loan. Interest should be accrued. I mean, it's at 1%. It's going to be immaterial, but technically it should be accrued on your books. Qualified costs continue to go through your income statement. So even though I just said that you're not going to be able to deduct whatever gets forgiven, it's still going to be an expense for your financial statements. It does not lower the loan. Once the debt is forgiven, then we will present that as other income and disclose that in your financial statements. That's the extent of my GAAP knowledge. I leave that to my friends in the A&A department. Other resources, I'm just going to touch on this. There are some other things out there. There's Main Street Expanded Loan Facility and Main Street New Loan Facility. If you are a company that is experiencing growth during this time frame or are poised for growth in the coming years because of whatever you're doing in your business or what's going on in the economy, you should look at these loans. They're definitely geared towards the bigger clients and bigger companies. You can see it's up to 10,000. Your eligible borrowers are up to 10,000 folks, and you can't have revenue more than $2.5 billion. You don't need to have a revenue in the billions. You could be a $30 million company, and you'll qualify for this loan. You were created and organized in the United States, have significant operations and majority of your employment in the United States. The minimum loan size is $1 million. So you can see this is geared towards the larger clients. The maximum loan, depending on which facility, is $25 million to $150 million. So these can be serious loans, but these are loans that you can use to really launch your business, and it's used for working capital. It's a quick payback though. It's a 4-year maturity with principal and interest being deferred for a year. The interest rate's a little higher than the PPP loans. It's cost of funds essentially plus 250 to 400 basis points. And there were some misleading things that when these things first came out, that people were going to use this money to refinance their existing debt. You can't do that. You can't repay debt with this debt. This is money used for working capital purposes. I touched on this a few weeks ago. Again, there's disaster loan money out there under SB 7B2. Loans up to $2 million, so to help with working capital. You can apply for this loan up until December 31st, once you understand kind of the damage that has taken into your business. So I haven't had anybody apply for this yet that I'm aware of. No, that's not true. Excuse me. I actually had one client get approved for this money. In two of their businesses, and I think they got 500 and 300,000 onto this. So additional liquidity to help them out. So this is something that you should look at as well. That's it. We're here to help you meet your goals. I mean, that's the way I view my job my job is to make sure that you guys meet your goals that you set out for yourself and your companies. And on behalf of my partners and all of our team members, thank you for trusting us to be your advisor. So my next technology thing I'll try to do is try to pull up my Q&As. And I'm going to try to interpret the questions. And are these items included in payroll total for forgiveness? FICA, state unemployment, 401k match, employee HSA contributions, fringe office reimbursement. So good question. Your FICA match, right? Your Social Security and Medicare match are not included. Your state and I'll even add to that, your federal unemployment tax is not included. Your state unemployment is a qualified expense. Your 401k match is a qualified expense. Your employer HSA contributions. I got to think that through. I think it is. I consider that under the group health umbrella. I would include that. I think I would let the bank say that's not included. And then the last question here is fringes, office reimbursements. So I look at fringes and office reimbursements as two different things. Reimbursements, if somebody's buying supplies and you're reimbursing them, no, that's not going to be included. Fringe housing allowance is included as long as compensation doesn't go above $100,000, including the housing allowance. Based on federal monies combined with the unemployment benefit, will there be an amendment? Don't want to bring staff back and have them lose $600. No, I don't think there's going to be an amendment. I mean, that's the fight between the Democrats and the Republicans. That's what held up this bill the first time. where the Democrats wanted that $600,000 included. I don't think there's going to be any amendment. I think that goes back to the incentive of bringing people back, and that some of them are making more money on unemployment. For group health plans, are premiums for sole proprietor owner included in payroll costs for forgiveness calculation? Yes. What about union health and welfare benefits? I believe so, because it's just group benefits. So I don't see why they would be excluded. And the welfare benefit, I assume that's the retirement plan. I don't see why that would be excluded. I see both of those as being included. One of my fellow partners threw a question at me. Car leases and truck leases count for rent. I say they do. The act itself, where I talked about covered mortgages, includes personal property. A truck is considered personal property. But you got to be careful to make sure you hit that 75%. So got a client, got some big leases on equipment. We went through the scenario yesterday. Do I take the 3-month deferment for the bank, or do I pay that in this out of this PPP money so I can get it forgiven? And we ended up taking the deferment because the rents were so high, we were never going to hit that 75% test, and he wasn't going to get any benefit. So the car leases and truck leases do count. Will this recording presentation be available for review after it's over? Yeah, I think, I know we're going to post it somewhere. The file may be too big to email out, but in our email of the slides in that Excel spreadsheet, we'll put a note on where you can find this presentation. Any word on what transportation utilities means? So there's certain taxes, generally in larger cities, that have a utility tax. I have yet to see one. I know it's in there, and once I got this question the first time, I'm like, no, transportation's not in there, but it's transportation utilities. So I don't think it's going to affect a large amount of people unless you're in a bigger city. Can you go back prior to receiving your money? I think that question is saying, can you use expenses prior to you receiving that money? And the answer is no. Your period starts with 8 weeks. It was confusing. I think when this first came out, there was a lot of things retroactive to February 15th. And I took the position that you could go back. But I think the frequently asked questions that have been published by the SBA clearly state that qualified expenses start on the day that you receive the funds. Can costs incurred to bring employees back be an expense that is covered? So I don't really know what those costs are. Oh, right, actually the next line says, such as a purchase of PPE, partitions, and cleaning supplies. It's a great question, but I think it's excluded. It probably should be included. Probably something that was missed out, but it's not in there as a definition of payroll costs. So I'm going to have to say no. But to keep our employees safe, it probably would have been a nice thing that we as businesses got helped out with kind of changing our environments. What happens to forgiveness if you release the individual for cause Does it affect your forgiveness calc? Yeah, it doesn't matter. It's a straight numbers game. So you just have to replace that person. The U.S. Treasury Department website states that your loan forgiveness, if you decrease wages by more than 25% for any employee that made less than 20. All right, so if you have somebody who is making $100,000 or less, so let's just use the example $100,000, and you lower their salary to $50,000. That is a decline of more than 25%. If you have that example, then we're going to end up losing $50,000 on our allowable forgiveness, even though during an 8-week period they didn't lose 50 grand. So the incentive is you really got to keep people at, if you're going to keep them, you got to keep them at 75%. How are owners of S corporation salaries affected? Can it be added to the loan forgiveness? So, yeah, whether you're a C corp, S corp, or an LLC getting a guaranteed payment, that salary is an allowable expense and can be forgiven. Now, don't forget that that cap is still $100,000 annualized. What compensation comparison on a per employee basis rather than on an aggregate? Will the compensation comparison be on a per employee basis rather than, yes. Yeah, I think that question is talking about the decline of 25%. That is going to be on an employee per employee basis. Is the restoration of wages allocated on a prorated basis over the calculation period or just a measurement period? So the nice thing about this plan is the restoration. So on June 29th, if you restore pay for that person who's making 100 grand from 50 back to 100 grand, that reduction and that forgiveness that you got goes away. And the same thing is if you drop 20 employees, if you hired them all back on June 29th, that forgiveness, that loss of forgiveness goes away. So it's not on a prorated basis. It goes essentially that you had those employees from day one. So that's why there's going to be a big jump in employment numbers come June, end of June. But be careful. Some of your employees might not come back because they're making more on unemployment. Is that 75% of the original PPP amount or 75% of qualifying expenses? That's a good question. It's 75% of the qualifying expenses. Well, I have to say that somebody gave me at least thumbs up, so hopefully everybody's giving me thumbs up. So thank you, Jen Forte. I even said your name on there. I don't know you, but thank you. I was told the 75-25 ratio was against the forgiven piece of the PPP loan and not the amount awarded. That's correct. That's right. That's 75-25% ratio is on expended funds, not the amount that was awarded. So again, example, if you had $500,000 that was awarded to you, but you only spent 400 of that $500,000 number, you would need 75% of that $400,000 expended, or 300,000. You wouldn't have to have 75% of the 500. For the unforgiven portion that becomes loan, what is the payback schedule, time frame, and fees? So there's no fees other than interest, which is 1%. Time frame is 2 years, but you get deferment for 6 months. You have a chance to ask for another year, another additional 6 months. And the payback schedule, I think, is a straight amortization over 2-year period. Another question is, June 30th is a Tuesday. How do we factor in normal pay versus that single day? The way the bill reads is, as long as those people are hired back on June 30th, doesn't mean you have to pay them on June 30th. You get that restoration back. I imagine we're going to get some more information on you on that piece. Because, again, I think there's going to be a big drive to bring people back at that point. How will PPP loan forgiveness be impacted by nonprofits receiving government grants? For example, some loan funds might be used to pay payroll that needs to be charged to a government contract to satisfy the nonprofit funding requirements. If the contract is a reimbursement base, the PPP loan is fulfilling a legitimate need for working capital, but once the reimbursed, will this need to be paid back to the SBA so there is no double dipping? The way the law reads, no. As long as you use it for payroll, it comes back to, remember those certifications that have kind of changed a little bit? Before you just said that COVID-19 was impacting you. Now they're making that a little bit more stringent, but the letter of the law says you don't have to repay that money. As long as you use that money for payroll and the other covered expenses, you don't have to give it back. I mean, take a staffing firm, right? And I have a staffing firm as a client. They're employees because they're being paid by that client, but yet I'm able to use my PPP money to pay the payroll. So I don't see any difference between your example, government contract example, as opposed to that example. So I would say, no, you would not need to pay that back. Unless there's something else in your government contract that would clarify that if you got a benefit from another government agency, that they adjust their calculation. Expenses need, there's a lot of questions. We're up to 63. It doesn't look like I'm halfway through yet. I will go as long as I can go, as long as there's people on. I don't want to talk to my screen. Expenses need to be incurred and paid. Do we have to calculate payroll from that day of funding through 8 weeks exactly? Now, I'm just having, I think the incurred is that somebody's not being, for lack of better terms, a pig about it. And they're not dumping July's payroll in May and June. Now, I do have an example, and I'm working with a private school, and teachers have the ability to elect to be paid over 12 months or 10 months. And a lot of teachers elect to be paid over 12 months. But if they change their policy and say, because of COVID-19, you may have a spouse that's unemployed, you can take the money in June. To me, that's incurred. That will be allowed. So I think if your payroll ended we ended yesterday, but you're not going to pay that first payroll, and you got your money today, and your first payroll is going to be paid next Friday, even though some of that payroll was incurred prior to that, I think that next Friday is fine. Because you would never be able to incur and pay 8 weeks of payroll within that 8 week period. I think it's trying to just take away that people don't take advantage. We work for union contractors, collective bargaining units, which call for contribution of various funds, $25 to $30. Is all this considered a benefit? I guess I would have to know what the benefits are. If they are for payroll, health, and retirement, then I would say yes. Dues, I would say no. If you're paying any part of their dues, I would say no. But If it has something to do with health, has something to do with retirement, has something to do with their salary, yes. Can you be a $2 million company for the Main Street loan? I guess it depends. It doesn't have a minimum on your size. It just has, I mean, they are going to underwrite you. So you have to have the ability to pay that back. But if you're a growing $2 million company, my guess is, yeah, why not? If at the end of the 8-week period, after calculating the amount of money used, can we just give back the difference and be done with the whole thing? Yes. Yeah, you don't have to pay it over 2 years. You can give it all back. Has the SBA provided any guidance or instances where there were voluntary employee terminations from 1/1/20 to 2/29/20? For us, voluntary terms are creating an issue where our headcount is lower in the 8-week loan period, therefore affecting our forgiveness. Now, I mean, the one thing that you can look at there is, remember, the denominator, your base period, you can look at 2 periods. You can look at February 15th of last year to June 30th on what your average full-time equivalents were per month. And then you can also look at it for January 1st to February 29th. So if you had a lot of people leave, again, let's say you had 50 employees, full-time equivalents, last year during that measuring period, and this year you had 10 people just voluntarily leave for whatever reason, and they all left on February 1st. I'm just trying to keep it easy. And they all work full-time, because again, we don't want to get into the definition of full-time equivalent. Your average employment is going to be less during that stub period. So you're going to want to use that as your denominator. It's not going to be perfect, but it will help you out. And I got a question today. Somebody had it was a medical practice. Somebody's leaving for another practice, and they're leaving today. And they're going to try to replace that person, but they might not be able to. So it's going to affect their forgiveness. And whether they leave voluntarily or you lay them off or furlough them, it doesn't matter. It's just a numbers game. I don't understand this one question. Payroll tax 1/3, 2/3 FICA. I don't understand. I'm sorry, I can't answer that. What happens if you do not use 75% of the loan amount on payroll costs? Does that eliminate all forgiveness? No, it doesn't. If it goes back to that one example where, let me just see if I can do an example in my head. So let's say I have $300,000 of payroll costs and $100,000 of rent. So I meet the 75% test there. But let's say my rent goes up to $200,000, and I expend $500,000 of funds. You will lose some of the forgiveness. It's not as drastic. And I can go back to that. Maybe I'll go back to that example once we get through some of these questions to show you what how that would look. But what it's going to do is it's going to cap your rent expenses to the extent of 75%. Excuse me. It's going to extend your rent expense to the extent of 25% of total expenses. Are educational institutions exempt from this? No, I mean, if they were eligible to participate in the PPP plan. As I said, I'm working with a private school on this. I've heard that qualifications for forgiveness is that a company has no other avenue for liquidity. How will line of credit? That has been. I think you may be confusing that 7B program. The PPP money was not affected by you having other sources of liquidity. You just had to say that COVID-19 affected your business. We outsource IT. We provide servers, server space, secure VPN paths. We pay monthly fee for this service. Is that a covered utility? So I think you're paying a monthly fee. You're the outsourcer, so you're paying a fee for that space. To me, that's rent. So if it's rent, then it's covered. It would be a covered rent cost. If you want to send me an email, give me a little bit more information on that one. But to me, you're paying some fee to use space. And as long as you had that contract prior to February 15th, I consider that rent. I make over 100 grand. Am I permitted forgiveness up to 100 grand? Well, I guess it depends, right? Depends on all the other factors. So your salary during that 8-week period can only be annualized up to 100 grand. And that amount that's annualized up to 100 grand is the allowable expense or covered expense. So we had a late attendee. He asked if we covered the SBA requirement that needed to have economic needs to qualify for the loans. I did that. I did, and I've talked through that question, and I'm going to read that out loud. I got to find my notes here. So question, this is from the frequently asked questions by the SBA. Do businesses owned by large companies with adequate sources of liquidity support the businesses of ongoing operations qualify for a PPP loan? I see that question being put in and that answer being put in, not for, I would say, our client base, which I believe who's on this call. Not to say there could be somebody else that is on our mailing list that's not a client and maybe fits in a different spectrum, but our middle market client, small client to middle market client, is not affected by that. So what they were getting there on that question 31, because I've had that question from a lot of clients: should I sign this thing or should I give this money back? Because I'm doing okay. To me, this is the colleges. This is the small publicly traded companies like the Ruth Chris that gave the money back, the Lakers. So I'm generally, I'm going to say a general statement. I'm generally comfortable with question 31 for my clients. Not to say that there can't be an exception to that. Fringe employer reimbursement for home office, internet, cell phone, etc. So that's an interesting question. This goes back to the question where the reimbursements were allowed to employees where they covered expenses. So if you require your staff to work from home, whether you require them to work from home or they just work remote because they don't work by the office, and part of your deal is that you pay for the internet and cell phone usage, then I would say that it would qualify as a utility. Absolutely. Is your wireless bill included as a forgiveness? I say yes. Can you confirm the limits for earning over 100,000? If somebody makes $300,000 a year, but will make over 100,000 during the 8-week period, only 50K earned, can we include all amounts, or do we still have to limit $8,333 a month? It's actually even a little less than $8,333. You really take 100,000, divide it by 26, because it's 8 weeks. It's 3,846 per 2 weeks times. It's about $15,384 is what's going to be allowed for that person who makes in excess of 100 grand. That'll be a covered expense. If the company received an SBA loan, pays rent to related entity, VIE, is this still considered allowable expense? There's nothing in there that says you can't pay rent to yourself as a covered expense. I'd be careful with changing your lease. It's got to be a contract that was in place as of February 15th. So don't, adjust the rent from 10,000 to 30,000 a month. Salaries over 100,000 are disqualified. Are related taxes related to the amount over 100,000 disqualified? So that's a good question, right? So remember, there's no payroll tax that is a qualified expense, but the SUTA that you pay on that person, that qualifies, even though it puts you over the 100 grand. And your health benefits qualify. So that 100,000 is limited strictly to your cash compensation. Does 1099 payments count as payroll? No, unless you're self-employed, and again, you wouldn't look at the 1099, you would look at the net income of the Schedule C. No, sorry, I didn't read the question. Does $2 million audit threshold apply to common ownership entities where none of the individual entities received $2 million, but the combined they did? No, I think it's going to be on an entity by entity basis. Is the complete health insurance premium a qualified expense or the premium less the employee portion paid? So it's technically just the employer portion, right? Because the employee portion is included in the gross wages. So you can get it to one way or the other. If you're using taxable wage, then you would include the entire health insurance payment. But if you're using the gross wage before it's being reduced by the health insurance premium because you have a 125 plan, then it would just be your employer share. What about the extra payroll deductions like Allstate or Legal Shield? Now they're excluded. I thought they might be included in terms of like a group disability, a group disability or group life insurance. Amount forgiven at the end of the 8-week period. The amount unforgiven at the end of the 8-week period can return in full. Any interest due on the amount returned. I don't know. I'm going to say that you're going to have to pay interest from the date the money was dispersed for the piece that was unforgiven. But it should be a fairly nominal amount at 1%. Can interest on truck loans, line of credit, and term loans be used? Yeah, to me, it qualifies as a covered mortgage payment. But it's just the interest piece, as long as that was in place by February 15th. So the line of credit is interesting, right? If you took money out of your line of credit on you had the facility in place on February 15th, but you had nothing outstanding. But then you borrowed $500,000 on your line of credit on April 1st because cash was getting tight, customers weren't paying. I'm going to say because that facility was in place, that the interest is a covered expense on your line of credit. So just want to clarify, can we count non-U.S. citizens as eligible workers? I want to say yes if they're working here. Can't find a pencil, but I want to write that question down, and I just want to, before I give a black and white answer on that, I want to just double check that answer. I think if they're qualified to work here, I would say yes, but I just need to check that. Does payments to subcontractor 1099 qualify for forgiveness if the work of the contractor directly affects our caseload? No, 1099s do not. And here's the weird thing about 1099s. If you go back and read the act, subcontractors are included in that. And if you go back and read the interim rules and regulations, subcontractors are included in that. But then in the frequently asked questions, the SBA said no, subcontractors are not included for that because they can go out and qualify it for themselves. How do we treat rent if there's administrative services companies paying? How do we treat rent if there's an administrative service company paying the rent, but the operating companies are funding the administrative service company for rent and other costs? Can we add the operating company share overall? So my guess is you have a bunch of consolidated entities. I think it will qualify. If truck leases count, what about truck loan payments? Yes, truck loan payment counts, but not the payment, just the interest piece. What would be an example of transportation costs on utilities? I can't give you an example of that because I've never seen one. Is 100% forgiveness possible? That's the best question today. It is, but it's hard. You have to maintain full employment and spend all the funds on the proper covered expenses. And when I say maintain, you got to get back to maintain. You got to get back to full employment. But if you don't have full employment, it might be hard to expend those funds. So that's why I say you have to maintain full employment to get 100% forgiveness. Well, monthly executive auto allowance count, well, that's considered cash compensation. It's a little excitement going on in my house. I don't know if you can hear it. My daughter's not cooperating. It's been fun homeschooling now for 7 weeks. Well, monthly executive auto allowances count. Only, I'm going to say doubt it because I imagine the compensation of the executive is more than 100 grand. So that's going to be counted as cash compensation. It's not going to be counted as as a lease. What date triggers the 8-week count? It's the date the money was dispersed. Payroll costs, pay date cover for payroll costs. Pay date covers a prior period. Generally, the first paycheck might be the beginning of the 8-week period, but would have been from before. Yeah, this is where I said it was incurred, but I think payroll is going to be that thing that's outside that umbrella. What they're trying to do is not have you put in payroll after the 8-week period in this period. So I think if you had a payroll period ended yesterday, you got the money today, and it's paid next Friday, that's going to count even though it was incurred prior to the loan. We included less than 30 hours part-time employees as full-time equivalents, 110 to 99 employee in the application employee count. We can adjust our starting employees basis comparison at the end of the PPP term, 8-week term. Yes, yeah. So the banks didn't do. You got to think of all the applications that they got. They used your certification that your numbers were correct, and they blessed it unless it was outside the whack. But yeah, so you'll be able to adjust your full-time equivalents and in that case pull out that 1099 employee. Now my dog's crying. Any advice on any difference of retirement plans or payroll, since we may not be able to deduct the forgiveness? Any advice on the difference of retirement plans or payroll? There's no, so retirement, I'm trying to interpret the question. Retirement is part of payroll costs. So I'm sorry, I'm not really sure I understand that question. if a principal employee makes more than 100K annually, but not paid on a regular basis, should you be paying the employee $1,923 weekly for the 8-week period to maximize the benefit? Yes, yes. So if you take out money, throughout the year, depending on your cash flow, you should take out the money on normal pays to the cap of that $10,000 annualized. I don't know how to do thumbs up, so consider this a thumbs up. All right, I think we're getting close to the end. We had 71 questions, it looks like. I don't know how many we answered at this date, but we're getting close. You mentioned we could pay out safety bonuses or other bonuses earlier than we normally would. Do we have to clarify them as anything, or all bonuses acceptable? I think all bonuses are acceptable. If we get PPP loan or the EIDL advance, we do not meet the full forgiveness amount. The remainder of the money, guys, I'm gonna have to put you on pause for a second. I'll be right back. I'm back, I'm sorry. If we get a PPP loan or an EIDL advance and we do not meet the full amount of forgiveness, the remainder of that money that we were given from the original loan, are we able to give them the rest of the money back or use it to pay off the loan right away? So the EIDL is part of the forgiveness piece, the EIDL advance. So yes, whatever money you have left from that PPP loan or the EIDL advance can be used to pay off that loan. Does 75% include rent and health insurance, or does 75% only include strictly payroll? 75% includes payroll costs. So payroll costs, remember, are payroll, health benefits, retirement benefits, and SUTA. Payroll tax, FICA, that IRS is not charging due to COVID-19. Payroll, I think payroll tax and FICA have not gone away. Our educational institutes exempt from the payroll tax employer portion that does not need to be paid with 941. All right, so I think that question is, do you take advantage of the deferment of the payroll taxes? So you can take advantage of the deferment of the payroll taxes up until the point that your loan is forgiven or a portion of the loan is forgiven. Once the loan is forgiven, you're no longer able to do that. And that's true for an educational institution that's exempt, as well as a for-profit company. Do we have to include all qualifying expenses in the calculation? For example, we pay rent, but use non-PPP funds. Well, yeah, you want to use, the money's commingled, most likely. There was no requirement that the money had to be in the same account. But if it is in a separate account and you paid rent out of the other account and didn't reimburse you from your PPP account, you should reimburse you because that rent will count. How do you handle overtime when calculating the annualization of payroll costs? It's just, unfortunately, if overtime is going to kick somebody above those annualized amounts for 100 grand, it's going to be excluded. State tax forgiveness, great question. So I think your piggyback states, Delaware, Maryland, they're definitely going to be forgiven because they're piggybacks, unless they come out and say something different. Pennsylvania, New Jersey, I think it remains to be seen. I don't think there's been any guidance on that at this stage. So somebody, when I answered the question about truck lease payments are included in the forgiveness, they are. And truck loan payments are, but not the whole payment. Remember, just the interest. But make sure you hit the 75% rule. We do many utilities via electronic payment or credit card payment. Do we need to call to get copies of all those? Yeah, I would download them. Imagine they're there under your account. Define outside the WAC. I don't understand that. Thank you. So the last question that I'll go through now, because it looks like the last question. Can we go over the 75% rule? What happens if we spend more than 75% on payroll or other expenses allowed? If your payroll costs, payroll and health benefits and such, everything under the payroll cost is more, if it's 100%, that's fine. You don't get penalized if your payroll is more than 100%. Remember the premise of the program. The premise of the program is to keep people employed. So if you pay 100% of the PPP money on payroll, not an issue. So the last thing that I want to leave you all with, and who's left, is do a projected calculation today. Look at where it is. If it turns out that you're going to have to give a lot of this money back because of how your numbers work out, you may want to think about the tax credit as opposed to the PPP money, and you have to May 7th to give the money back. That's next Friday. We can help you with that calculation. 2, do it now, but then also do it around week 6. Find out where you are in week 6, because the world's going to dramatically change over the next 6 weeks. At least I hope it does, so that you can either spend some money on the proper expenses or hire people so that you can maximize your forgiveness. And then when it comes June 15th, it may be beyond your 8-week period. Look at restoring your employment to full employment to maximize your deductions or your forgiveness. That being said, I want to thank you all for coming, and that's all I have today. So have a great day. Thank you.